Hello crew, Scott here, your loan man. Hope everyone's doing well. I wanted to address interest rates, specifically what I'm seeing, as well as the pending Fed meeting, which will be on Wednesday the 20th, less than a week away. I would not be surprised if the Fed raised rates again by another 0.25%. The meeting minutes and the outcome of the meeting, while the meeting actually occurs over a 2-day period, they make the announcement after the stock market has closed, and that'll be on Wednesday afternoon. If they don't raise rates again by another quarter on the 20th, I would expect that will happen again one more time this year. Now, the good news is I am predicting that would be the last of the Fed rate increases. We have seen over the last year and a half the most aggressive Fed policy of my lifetime, and really of any point in the modern era as it relates to interest rates and increases. We have more than doubled an interest rate. What that means is that for the average buyer right now looking to purchase a home, imagine that they have 20% to put down, they have good credit, they're looking for traditional 30-year fixed type financing. You're going to be looking at an interest rate in the high sevens, 7.875, something like that. Certainly, if you're comfortable or able to pay a point or two to buy the rate down, you could see something closer to 6.5 or 6.75. So one piece of advice that I would share with you, if you're negotiating around purchasing a home, don't get tunnel vision just on the sales price, but work with the seller and negotiate for them to pay for your closing costs, and use that concession to buy the rate down and make the home and the payments more affordable for you, so you can actually get more home for your money and for your monthly payment. Now, if we look into the future a little bit, generally what happens during a presidential election year is that there's a great deal of pressure put on policymakers, put on the Federal Reserve by the party in power to juice the economy before the election. I would expect that rates will come down at some point early next year around the spring. And what this will do is create a pop in the stock market. It'll create a pop in the mortgage market, just more activity. Things aren't going to change dramatically. But as the Fed begins to change their tone around interest rate increases, and they start to signal that they're done with this aggressive policy, that they're going to calm down, that they're going to pause, that they may even be looking at lowering rates, that change in tone alone is enough to make the market react. So one thing you'll see next year is more people entering the market. It's going to become more competitive as there's more buyers. We have really repressed and suppressed demand at this time. So if there is a property that you're interested in and you can get it for a fair price, I would say don't hold back. In my local market, prices are down somewhere around 5 to 7%. So on a case-by-case basis, if you can find the right property, I would say go for it. I hope that's helpful to you, and reach out to me directly about your specific situation. Thank you so much.